What up, guys? It is Tuesday, January 24th. It's 2:09 p.m., and this is the crypto newsletter. So starting off with it, we're going to have UN IFADs. So this is the International Fund for Agriculture Development. The director and controller, he seeks to address poverty and hunger with blockchain. He said the key thing here is to get data in a way that you can visualize it, he said. So let's hear it.
Compared to, I guess the really fascinating part to me is the idea that you can kind of track more clearly using the blockchain. Can you just speak to, what looks different now to, if you were doing this 2 decades ago, and what does that information enable you to do now that you can do?
So the key thing here is to get data in a way that you can visualize it, you can see it, so capture it first, and then connect it, and then use it for decision making and making food systems more efficient, reducing waste in supply chains, for example, reducing fraud and error because there's less transparency and traceability. So before, we didn't have this new technology that allowed us to see everything in one place, to have the data all in one place. And then the compliance side is also another angle where because we have the data in one place now, we were able to connect all the actors that we're dealing with to our anti-money laundering system. And that way we ensure the compliance side of it as well. So I think from 2 decades ago, we just had very basic ERP systems, if even, and each of us was very siloed. And I think the actors in the development eco-chain were extremely siloed. And now we're able to connect. We're able to have not only the data together, but also the actors much more closely working together on using blockchain solutions as one example.
There we go. So then we got this. Signature Bank restricts accounts at Bitstamp, BitHum, Binance, eToro, Huobi, Kraken, Nexo, and OKX. So something's going on with Signature Bank and everything going on with there. I think that's the same bank that put the $100,000 limit for transactions with Binance. So something's going on over there. But yeah, so let's keep going. We have World Bank, Ripple, and Stellar bridge assets. So if I click this, looks like a document from the World Bank. It talks about the universal wholesale CBDC. So it says existing platforms such as Stellar could provide part of the infrastructure for this type of solution. Dude, you gotta love it when you come across this stuff. And then IMF, Port approaches enhancing cross-border payments and settlements, with jointly published by the Bank of Canada, Bank of England, Monetary Authority of Singapore. It analyzes 2 legacy system upgrades and 3 approaches involving wholesale CBDC. A wholesale CBDC is a special kind of CBDC available only to selected financial institutions that operate within the payment system and not to the public. The first 2 WCBDC approaches use country-specific tokens. One can be exchanged across borders, while the other one cannot. The third use is a cross-border universal wholesale CBDC backed by a basket of currencies issued by the participating central bank. To me, that seems like more of like what XRP would be or XLM would be. It would be a universal wholesale CBDC and made up of a basket of other local country CBDCs. And I think I missed one in there. So the first 2 wholesale use country specific. The third uses a cross-border universal wholesale CBDC backed by a basket of currencies issued by the participating central banks. The universal wholesale CBDC poses significant implementation challenges. Then you go down here to the World Bank, and it says here, the third group of fintech approaches to the de-risking issue consists of attempts to redefine the existing correspondent banking architecture, often by using cryptocurrencies as bridge assets. Then you come down here, a number of different bridge assets have been proposed, from Bitcoin and Ether to product-specific cryptocurrencies such as XRP, promoted by Ripple, or Lumens, promoted by Stellar. Such efforts need to be treated, however, with caution. The viability of using cryptos to facilitate cross-border transfers will depend on the availability to convert cryptocurrencies and local currency at will. Then we go up here, and it talks about, in an example about alternative solutions of correspondent banking from the World Bank, Ripple. The model focuses on commercial cross-border and interbank payments combined with cross-currency fund settlement Ripple allows for a move away from establishing upfront correspondent banking relationships toward a more dynamic approach. This approach identifies a path for the flow of funds from a sender in a particular currency to a receiver in a particular currency through a series of participating institutions that offer services for that currency. This method can lead to better discovery of prices for foreign exchange transactions and to expanding access to such services for smaller remittance companies. Ripple's own crypto, XRP, is actively traded on several crypto exchanges, and Ripple also operates its own exchange structured as a network described previously, in which the top currencies actively exchanged are the won, the dollar, the yen, and the euro. In addition, other cryptocurrencies like Bitcoin and Ether are also actively exchanged. There we go. So now let's head to the next article. All right, the Bank of Spain has given an approval for the launch of a pilot program involving the issuance and usage of euro-pegged stablecoins. So the Bank of Spain greenlights this. So let's see who may be involved. We come down here and we can see that, let's see. So it seems to me that it's managed by Money, or on this in the Money CEO. The future of payments is digital. This is our chance to show the rest of Europe and the world that we are at the forefront. Eurum is the ultimate pan-European solution that allows citizens and businesses on the continent to send and receive money instantly. There are aims for this stablecoin project to be approved by regulators after this test to tackle automatic and periodic payments that would benefit from programmable fiat equivalent money. As an example, a company could program payments to providers based on the sales executed on a given day, or allow workers to program their allowance payments on a daily, weekly, or monthly basis automatically. So this is a private-led initiative and has no relationship with the digital euro initiative led by the ECB, which is currently in its investigative phases to decide if it will be issued. It will. So let's keep going. So this is from the R3 CEO, I believe. So he had said, oh, no. Okay. Well, it seems like it's from, so the shakeout will continue. There'll be more shoes to drop. More victims of contagion, more clients who learn their money is lost. R3's Charlie Cooper told Financial Times' Scott Cipollina and missed the New Year crypto shakeout. So read here, let's see. So if we go down here, he said, some of the crypto industry's biggest names have been embroiled in clashes with regulators and prosecutors in the opening days of 2023, showing the issues that plagued the sector in 2022 are already spilling into the new year. Reality never resets on January 1st, and that truth applies to crypto. The shakeout will continue. There'll be more shoes to drop, more victims of contagion, more clients who learn their money is lost, the managing director at R3 said. So if we go down here, the New York State Department of Financial Services said Coinbase's systems to enforce AML rules were immature and inadequate. Coinbase called these shortcomings historical and said it had taken substantial measures to address them. Meanwhile, we're only 1 week into 2023 and 3 big-name crypto shops have already announced layoffs. You got Silvergate, you got Genesis, which filed for bankruptcy, and then Celsius Network was hit with a civil suit by the New York Attorney General. So if we go down here, it says Binance again found itself in the regulatory spotlight after the U.S. SEC intervened in a $1 billion deal that would see its U.S. affiliate buy the assets of Voyager Digital out of bankruptcy. So there wasn't enough information to show how Binance U.S. would close the deal, and Binance U.S. said a diligent review of the deal is to expected to be welcomed. Let's go down here. Christmas highlights it gives, but we can skip all that. Let's go into data mining. So right here it says, a note on Tether. The past 12 months have been truly terrible time for the crypto industry. Bitcoin, the industry's flagship crypto, fell about 2/3 in 2022. Tether, the company behind crypto's largest stablecoin USDT, is also feeling the effects of the prolonged market drought. According to numbers shared by data provider Crypto Compare, the monthly trading volume of the Bitcoin Tether pair fell to 6.6 million coins in December, its lowest point since April 2022. There we go. So traders are turning to the Bitcoin Tether pair less regularly. All right, so let's keep going. We got fixed supply increases in demand. You don't have to go to MIT to know what's going to happen. Absolutely. Let's hear Brad Garlinghouse.
Institutions, Joey and I sat in a meeting not that long ago with, some of the largest institutional money in the world trying to get smart about crypto. They owned zero on that day. I don't know if they do today. But as they enter the market, you have fixed supply, increasing demand. You don't have to go to MIT to know what's going to happen.
And it's really not rocket science. I mean, right then and there, what he just said, fixed supply. There's these digital commodities, ones that are fixed in supply that are going to power this fourth industrial revolution. And then you got this overwhelming amount of demand that's about to pour in, because crypto and these digital assets and these blockchain protocols are going to fundamentally reshape every single industry. I mean, it's not rocket science. So let's keep going. Breaking news: Brazil and Argentina will work this week to announce that they are starting preparatory work on a common currency. The future's coming. This is Gold Telegraph. We can see that this article is right here. Let's go to it. So Brazil and Argentina to start preparations for a common currency. Other Latin American nations will be invited to join plan, which could create world's second largest currency union. So Brazil and Argentina will this week announce that they are starting preparatory work on a common currency, in a move which could eventually create the world's second largest currency bloc. South America's two biggest economies will discuss the plan at a summit in Buenos Aires this week and will invite other Latin American nations to join. The initial focus will be on how a new currency, which Brazil suggests calling the SUR, South, could boost regional trade and reduce reliance on the US dollar, officials told the Financial Times. It would at first run in parallel with the Brazilian real and Argentinian peso. There will be a decision to start studying the parameters needed for a common currency, which includes everything from fiscal issues to the size of the economy and the role of central banks. It would be a study of mechanisms for trade integration. I don't want to create any false expectations. It's the first step on a long road which Latin America must travel. Initially a bilateral project, the initiative would be offered to other nations in Latin America. It is Argentina and Brazil inviting the rest of the region. A currency union that covered all of Latin America would represent about 5% of global GDP. The world's largest currency union, the euro, encompasses about 14% of global GDP when measured in dollar terms. There we go. Now let's go down. It says, because of all this, all the steps towards integration will certainly be more cautious and will have to be focused directly on delivering results and showing why they are useful. So there's been this global push for all the countries in the world to steer away from the dollar, and that's what's happening today, as you can see, and as you can see in the charts with the dollar melting down. Then we have this: can the XRPL represent the value of everything all at once? Can XRP be backed by gold? Both questions seem related to misunderstanding what XRP is and how it functions. But basically, this is from that Bank of International Settlements document that came out, I believe it was last year in the summer. And you can see here that the wholesale cryptocurrency, you have local currency, commodity money. So it was like, let me see what that document was called. I think it was like the future money. I can't seem to find it right now. So we'll just move on for now. But yeah, this basically laid out what they're planning as far as the future of money and kind of what it would look like. It was like a money tree type of thing, saying the roots grow at the bottom to the top, branches out, and you have the wholesale cryptocurrency, you got central bank digital currency, central bank issued cryptocurrency retail, right? Commodity money, CBDC wholesale. So Libra was classified as this. And basically what Libra had set out to do was kind of what XRP is already kind of, the money flower. That's what it was called, not a tree. But Libra, what it was trying to do is basically theoretically what XRP has currently been doing. So there we go. Now we got El Salvador pays back $800 million maturing bond. And then we got Fractal, the platform for gaming NFTs developed by Twitch co-founder Justin Kan, is expanding to the Polygon network. So Polygon's getting a lot of big brand kind of recognition and usage. Jim Cramer warns investors to stay away from crypto and instead look to gold. Love to see that because he's always wrong. Then you have, this was interesting. Many New York Stock Exchange listed stocks halted for a technical issue. I wonder what happened there. It didn't seem to have any kind of news about that, but I thought that was interesting to see because that's kind of something that we've all been waiting for. One of those scenarios where the stock market halts, everything gets frozen, ice 9, but seems like everything kind of worked itself out with that today. Binance mistakenly mixed client funds and token reserves in the same wallet. Let's look at this. So the exchange said it is transferring the collateral out of the shared wallet. Collateral assets have previously been moved into this wallet in error and referenced accordingly on the B token proof of collateral page. So it seems like they're working this out. To be clear, Binance holds all of its clients' assets in segregated accounts, which are identified separately from any accounts used to hold assets belonging to Binance. Binance does not invest or otherwise deploy user assets without consent under the terms of specific products. There we go. And then Binance processed around 345.8 million worth of Bitcoin for the crypto exchange BitLotto, which last week was charged with money laundering 700 million by authorities in the US. So Binance is still on the radar of regulators, and we're waiting for that shoe to drop. And it's just so obvious, though, that I don't think it's going to happen anytime soon here. I think it would be when the market's already up a little bit more. So with Binance, there's just so much coming out about it that it's kind of obvious. So I do not think we'll see anything happen with Binance anytime soon here, but there still is that possibility that something could unfold. Pantera Capital is upbeat and excited for the future of blockchain industry, particularly DeFi, floated to lead the next crypto cycle. So Pantera CEO Dan Morehead believes Bitcoin has bottomed and will soon make yearly gains. So let's see what he's got to say. He's confident we've already seen the worst of Bitcoin prices as crypto markets regain their footing following months of downward trajectory. He reasoned that digital assets and blockchain will thrive despite last year's carnage. Pantera itself believes there's no better time than now to start a company in the space. Love it. He said, for example, when Mt. Gox went down, it represented 85% market share, much larger than FTX share today. He compared Bitcoin's 54% drawdown from January 1st, 2022 to January 17, 2023 to Tesla, Meta, and PayPal stock, all tanked slightly more than around 60%. So blockchain's resilience in the face of a terrible macro market for risk assets and historic idiosyncratic disasters is impressive. I believe that Bitcoin has already bottomed, and we will soon see blockchain assets continue their 13-year 2.3x per year appreciation trend soon. There we go. And he said, Bitcoin bottom or not, DeFi could lead the next crypto cycle. He said the solutions to this current suite of problems will take another 2 to 3 years to be solved and built out. Many of them and the future innovations they enable will provide excellent investment opportunities. About DeFi. There we go. Now let's keep going. So Bitcoin options trading on Deribit exchange totaled over 4 billion last week as demand for bullish call options increased. So we're seeing that the derivatives insights are showing more room to the upside for a Bitcoin rally. Then EU proposals on the metaverse and digital euro are due in May, the EU Commission has said. So let's see that. So the bill is set to underpin a putative new central bank digital currency, Financial Services Commissioner of the European Commission said. So the European Commission, the executive body of the European Union, will publish a bill to underpin a digital euro and set out its strategy on virtual worlds in May. Even though the ECB has yet to decide whether to issue a CBDC, the Commission has indicated new laws could be needed to assert a digital euro status as legal tender and set anti-money laundering rules. Our legislation will be the framework for a digital euro. It will be negligent if Europe did nothing now, but at some point in 5 or 10 years had to urgently rush through something. The bill is set to be published by the Commission May 24th, and it's up to the European Parliament and governments and countries in the EU to look at their finer points around the use cases of a digital euro and the technology to be used. From a consumer point of view, what can I do as a consumer with a digital euro that I can't do with current payment systems? The metaverse is one of the pressing challenges ahead of us. A new virtual environment must embed European values from the offset. I'm talking about the metaverse. So there we go. Now we got lawmakers at the European Parliament Economic and Monetary Affairs Committee is intended to anticipate international bank capital norms, and they voted to impose prohibitive capital requirements on banks holding crypto. Let's see. So in the meantime, there's a leaked version with a bid to anticipate international norms that would limit the amount of unbacked assets such as Bitcoin and Ethereum lenders can hold before the European Commission proposes more extensive rules. In the meantime, banks will be required to hold the euro of own capital for every euro they hold in crypto. Such prohibited capital requirements will help prevent instability in the crypto world from spilling over into the financial system. Over the past couple of years, we have seen that crypto assets are high-risk investments. Goes down here. There's no definition of crypto assets in the legislation, and therefore the requirement may apply to tokenized securities as well as the non-traditional crypto assets that interim treatment is targeted at. Okay, now let's keep going. So the ECB's initial climate-related statistical indicators are an important first step towards narrowing the climate data gap. They cover sustainable finance, carbon emissions financed by financial institutions, and climate-related physical risks. So we see that same talk, we got the green transition underway, and we're seeing that they're covering it. Then we have Bitcoin's near 40% January rally has shifted focus to prices last seen in August 2022, and the breakout has opened doors to go to 25K for Bitcoin. Then North Korean hackers behind 100 million Horizon bridge theft, Harmony One, I believe, that was what it was on. Let's see. Yeah, Harmony blockchain. Okay. Now let's keep going. Multiple altcoins have hit all-time highs against Bitcoin or in the dollar in the last month. Could we be heading for a market turnaround in 2023? I believe so. So you have tokens including Rocket Pool, OKCoins, OKB, and Optimism have each hit all-time highs, either against Bitcoin or the dollar so far this month, potentially setting the scene for a major turnaround in 2023. I believe as well too. You can see that Rocket Pool, whatever that is, has hit new all-time highs 2023. And it's not just altcoins. You have GMX hit record highs against Bitcoin mid-December. Trust Wallet also peaked against the dollar in December. Toncoin, which is Telegram's coin, I believe. Yeah, so you're seeing that be the case. But if monetary policy continues to head in the dovish direction, analysts are expecting even more growth could be in the pipeline. There's likely to be much greater support for digital assets by investors if and perhaps when monetary policy reverses in the second half of the year. It will also be the point at which the momentary higher correlation between risk assets such as equities and digital assets will degrade. There we go. Now let's keep going. So happening this week, you have what is a digital pound really useful for? January 26th in a couple days here. For Ripple, you got other kind of companies in here. There's a webinar about that question. And then you have asset managers licking their chops over a potential GBTC takeover. So you have that whole thing going on with Genesis, Digital Currency Group, Grayscale. So GBTC is looking to get taken over. A new global map is emerging that presents challenges and opportunities, says Lagarde. Europe can thrive in this changing world, and the ECB will play its part by staying the course and bringing inflation down. There was a speech today by her. Then we have SEC Chair Gary Gensler. I said the runway is getting shorter for platforms to come in and register. And if the runway is getting shorter, then presumably eventually the runway is going to run out. Bam. Then you have this. I think you're going to see a lot of bipartisan work to get to the bottom of why Gary Gensler wasn't doing his job. Referring to the FTX meltdown, Republicans and Democrats are going to be involved with that. There we go. European banks must fully cover crypto holdings with capital. We've already read that. And then how long can crypto's New Year rally last? Not long without some movement from central banks. So we had kind of touched upon that as well too. And then you have the digital euro will never be programmable, the ECB's Fabio Panetta says, rolling out a feature that some see as an advantage of blockchain tech. Then he speaks again. Our priority for the digital euro project has always been clear: to preserve the role of public money in retail payments by making it available in digital form alongside cash, says executive board member Fabio Panetta. There we go. And then you got the UK Treasury is looking for a CBDC head as it explores digital pound. Let's dive into that. But also, EU committee approves BIS policy to let banks hold 2% of capital in Bitcoin. Let's go into the head of CBDC for the digital pound. So the country's government will introduce a consultation on its CBDC in the coming weeks. So a new LinkedIn job posting from the UK Treasury is seeking a head of central bank digital currency. The successful candidate will be responsible for leadership of HM's Treasury work on a potential digital pound, a UK central bank digital currency. The CBDC chief will lead the Treasury team as it works with the Bank of England on the government's soon-to-be issued consultation on the digital pound. The listing continues. The role will fit into the existing payments and fintech team and is separate from the current head of crypto assets and digital currencies. There we go. So now let's keep going. So the doomsday clock has been moved to 90 seconds before midnight, the closest it's ever been, citing the war in Ukraine. Here's that doomsday clock.
The members of the Science and Security Board moved the hands of the doomsday clock forward, largely though not exclusively, because of the mounting dangers in the war in Ukraine. We moved the clock forward the closest it has ever been to midnight. It is now 90 seconds to midnight.
Shit's so weird. All right, let's keep going. Multiple New York. Yep, we already knew that. Bill Gates, I see China's rise as a huge win for the world. The current mentality of the US to China, and which is reciprocated, is kind of a lose-lose mentality. No idea what he's saying there. Let's keep going. We got our stablecoin AUDD launched on the Stellar.org blockchain on the 1st of November 2022. Make global payments and trades with near instant settlements, connecting Australians to the blockchain economy. So we got Stellar. We already know how tied up they are. China accuses the US of sabotaging other nations to resolve its catastrophic debt problem. SEC staff is reviewing trading activity at the New York Stock Exchange Open. And then we have Congress may decide that the SEC is not the right regulator for some or all of crypto. I agree. Oral arguments in Grayscale's investment appeal of the SEC's decision to deny the conversion of its GBTC trust into an ETF will be heard on March 7th. So March 7th. Then there's a lot that could happen for the crypto industry in India and how the nation regulates it. What India does during its G20 presidency may provide some clues. So let's take a look at that. But before I dive into that, I just want to cover that 6 group subsidiary SDX Global is now allowed to issue euro denominated blockchain bonds, which can be settled with tokenized digital euros, previously only Swiss francs. I believe SDX is tied up with Quant. And then you have Hugo Filion. He did an interview with Bitfinex. And let's just hear this real quick.
Firstly, what we call the flare time series oracle, which is a way to get probabilistic data onto the Flare network. So at the moment, the data that's coming onto the network is prices of various assets, at the moment crypto assets, but could be any price. But it can be any kind of data that moves over time. So a data series such as weather, some kind of index, like a stock market index, really any piece of data that moves over time. So the FTSO is a highly decentralized oracle, and it leverages the Flare token for safety. And the way it does that is that essentially we have what we call an FTSO data provider, and each data provider provides an input to a data series. In fact, each data provider provides an input to every data series. And token holders, Flare token holders, can delegate to a data provider, and that gives that data provider a weighting in the calculation. And so it's kind of a bit like Flare's proof of stake system, whereby essentially we're using the native token to give security to a price oracle.
There we go. So that's how it kind of works. Also, Treasury Secretary Janet Yellen advised Congress that her department is deploying an additional accounting maneuver to avert breaching the federal debt limit. And SDX, we just covered they launched the euro-denominated stablecoins. They got regulatory clearance for that by FINMA. If we go back to that article now, India's clamped down on crypto, what we'll do with this G20 power. If we go down, a singular event has given India an opportunity to shape global policy for everything in crypto. Its presidency of the Group of 20, its term, which began in December, puts the country in the driver's seat as the developed world looks to define the future of money. The presidency comes after India announced steep crypto taxes on February 1st, 2022, that were blasted by crypto companies operating in the country. If we go down, there's a lot that could happen for the crypto industry in India and how the nation regulates it. What India does during its G20 presidency may provide some clues. India's year-long G20 presidency gives the nation the power to set the crypto agenda for the Intergovernmental Forum. India can now bring together different stakeholders, the 19 countries in the EU that make up the G20, which together represent over 85% of the global GDP, which invited international institutions, including the United Nations, the International Monetary Fund, and the Financial Stability Board. India Prime Minister has stated that the G20 presidency is an opportunity for the nation. Finance Minister has said that how to regulate crypto assets will be one of the presidency's priorities. So the first meeting of the financial working group was held in the middle of December when each member presented their stand on the global crypto regulation. The second meeting will be held February 24th to 25th. So that is definitely going on the radar. I'm going to save that and make that document for the summary of 2023 events. Then we have, if we go down here, I don't wait till regulation comes into place for taxing people who are earning profits, the finance minister said when asked how a nation can tax something that it doesn't acknowledge is legal, which is why the G20 presidency is forcing India to crystallize its position on crypto. Two recent events have put a spotlight on this. That was, the first was a closed-door focus group meeting involving officials from more than 10 emerging market economies earlier this month in New Delhi, and the consensus was that crypto assets are risky and not worth it. This is expected to represent the view of the Indian Central Bank. The IMF is expected to include the observations on crypto in an upcoming discussion paper, potentially offering to replace the FSB's blueprint for the G20 talks. The second was a discussion held at the National Institute of Public Finance and Policy, an autonomous research institute based in New Delhi. It was at first in terms of bringing policy think tanks and industry players together. The government wanted to learn about the latest developments in crypto. And then if we go down here, it's talking about a new budget to be announced February 1st, 2023, and it's called for a change in the taxation structure. So if we go down, India CBDC pilots, what is Lyria crypto? India is all for launching. While it's Lyria crypto, India is all for launching its retail CBDC by the end of 2023. India launched wholesale and retail CBDC pilots last year. The retail pilot is meant for the private sector and citizens. The wholesale pilot restricted to financial institutions. India wants to launch its retail CBDC nationwide by the end of 2023. The focus has been on the retail pilot. While several banks and cities are involved, a true picture of the results will emerge in the coming months. In the meantime, India is grappling with two big questions regarding CBDC. How will the central bank secure citizens' privacy, and what is the public policy use case of the CBDC when you already have a successful digital payment system through UPI? While India's digital rupee will work to complement the payment system, the pilots are ongoing and will give us a better understanding of all the best public use cases, a senior official familiar with India's CBDC pilot said. In short, there's a lot that could happen in crypto regulation in India and development in the months ahead. How the nation manages the G20 presidency may provide a blueprint. So there we go. So that's it, guys. That's it for the crypto newsletter. I will see you guys in the Discord if you're not already in it. Click the link in the bio. I'll put the link in there. Come join it. Say what up. I'll say what up too. And I'll see you guys in the next video.